Hey everyone, this is GreenSpot Trades with a quick video in response to a viewer request. So somebody asked me what I thought about the Phillip Morris chart, well actually the Altria Group chart, which is the U.S. division of the cigarette maker for Marlboro cigarettes and various other brands and other tobacco products. For many years, this was a good stock to have in your portfolio. It paid a reliable dividend, and previous generations of people, I'm talking like way back in the 70s, 60s, maybe even the 80s, it made some people quite rich actually. But this viewer wanted to know what I thought about the chart as it looks today. So let's have a look here. So first thing that I usually do when I look at a stock chart is I look at what it's been doing over a long period of time, over the last 5 years or so. As you can see here, it kind of peaked here at 77, and since then it's been kind of in a downtrend. You can see it tries to make another high, but it's a lower high. And then it makes another big lower high here on the chart at towards the end of last year. And then earlier this year, it tries to rally again and then pulls back some. That's actually quite bearish action. Usually when I want to buy a stock, it's going into new highs and it's going in an upward trend. So I'm kind of a momentum type of stock investor or stock swing trader. But recently, there's been some news where they're talking about re-merging with the Phillip Morris company, which is the international division for the cigarette maker. Because about 10 years ago, they split up and broke up into two separate companies, an international division and a U.S. division. So as that news came out, you got this big red candle right here a few days ago with a big spike in volume with about 60 million shares or so traded. That was significant. But what's interesting about this is that you had the rally, the stock pop, and then it smacked right back down. That's why you get that big red candle here at the end. This is a very bearish sign because it indicates that the stock popped on the news, people thought would be positive, but the price got overwhelmed by sellers saying that, oh, look, we're up like, 7% or so from where we were yesterday. I won out. So a lot of people who were holding onto these shares looked at this as a selling opportunity and they smacked it right back down. So that tells you that a lot of people holding the stock right now aren't very confident, and the people who are nervous are outweighing the people who are holding on to this, who want to hold on to the stock for the long term or want to get in and buy it. And that's not very good if you want to get a return anytime soon. At best, I think this is going to be a dead money stock where it's just going to be sitting there and it's probably not going to go anyplace. Or worse, this thing right now is at 45. You could see it back down into like the $25 or so in another year or two. It does pay a 7% dividend yield now. And historically, this has always been a good dividend stock, but usually the dividend hasn't been that high. Usually it offers a dividend about 4%. Or 5%, but usually when you see a stock that did pay a good dividend and then the dividend yield rises, it's going to keep rising further. And a lot of that is because people are anticipating the company having trouble and cutting the dividend in the future. So there's a lot of risk in having that, or you could be having a stock holding on to a stock that's yielding 7%. And then what happens if you lose 7% on the price, or 14%, or 20%? Well, there goes your dividend. So it's not exactly a really good deal every time you see a stock that has such a high dividend yield, even if it's been a good dividend yielding stock in the past. There's usually a reason that you're suddenly getting a premium on the yield. So let's go take a look at the Phillip Morris International stock chart. As you can see here, also in a downtrend, there's just not a lot to like about this chart. You see that it also kind of smacked down here. This one actually seemed to have dropped on the news from where it was before. Probably because the U.S. division isn't doing too good. And if they remerge the companies, then that could probably weigh down the performance of the international stocks. But fundamentally, I don't think smoking is going to be a very good place to be going into the future because, in the United States and internationally, we're much more aware of the dangers of smoking tobacco and chewing tobacco, and even vaping products are coming under scrutiny nowadays. There's just a lot of resistance against this type of product. So fundamentally, I'm not very impressed. Looking at the charts, I'm not very impressed. So what would it take to change my mind on a stock chart like PM or Altria? Well, what I would rather see is a candle like this with a volume spike, but instead of getting smacked down, going the other way and breaking this trend of the lower high. So a positive sign would be is if you see on volume it breaking above the most recent lower high, so above this 58 level. But then again, this thing could continue to trend lower, and the lower high might be set. It might come back and rally up to like 54 and then come back down. In that case, then 54 would be the lower high that I want to see it break. Another thing that could happen is I would want to see this blue line here. That's the 200-day moving average, and that's a pretty good trend indicator. If this flattens out and then it starts curling around and going above the 200 daily moving average, then it would be of more interest to me. Here's an example of what that looks like. So we have this NVIDIA chart, and it wasn't a strong uptrend. It's a little bit different from Phillip Morris in that it's just gotten knocked down and it's been a shorter time horizon. So this move may not be as powerful, but see how it is. This is kind of flattening out a little bit, and then it's tightening up here, and it's kind of, after being below the 200-day moving average for a long time, it's starting to play around with it, and if it continues to do this, there's a good chance that you'll see it rip up to about 200 or 225 again. So let me show you a chart that I really like, which is a positive chart, is Target. And this one has my attention. It's a very interesting breakout. So what you have here is for multiple years, it's been stuck in this trading range. It couldn't get above like this 85 sort of area here. And kind of like the Altria stock, it was trending kind of lower here for a little bit. But look what you got. You got a reversal here where it did do that break, but it did break the 200-day trend, and so this was a decent rally that you probably could have made some money on. But more importantly, what I really like to see how we have this volume spike here, and then it blasted into this completely new territory where the stock's never been before. That is a very good technical setup. And on top of that, the company itself is kind of changing their strategy and the way they approach their online sales. They're doing some new things. I believe they have some relatively new management that's implementing this new strategy and new plan. So those are all good signs that are generally positive for going long of a stock. Another example of a good breakout is Disney. So what you have here is on volume, see a 60 million share spike, where it's going into a new all-time high after being in a trading range for many years. On top of that, you also have an uptrend where it was forming higher lows. It couldn't break the resistance, but that kind of coiled up the tension there, and then now the buyers of the stock are overwhelming the sellers, and they're buying at higher and higher prices. So that's a little bit of technical analysis for today. Hope you enjoyed it, and feel free to comment. Please like my channel and subscribe if you want to see more. See you next time.